What's happening there, guys, and welcome back to our channel. Investment is one of the most important and also the trickiest way to earn money. So if you've been in this business for a while or are new to it, we've brought you 5 harsh truths about investing. So stay tuned. Number 1, you will lose money. What happens when you invest to earn profit, but rather experience loss? Sometimes you'll immediately lose money when you buy an investment. The stock you buy at $100 immediately proceeds to go down $99.23. While investing presents the potential for incredible long-term returns, you'll take on losses in the meantime due to the uncertainty and price fluctuations of assets. It's important to accept early on that losing money is part of the game. Rather than getting discouraged, use your losses as learning lessons so you decrease your chances of making the same mistakes in the future. A few mistakes may keep coming up because we buy on emotions rather than logic. Don't try to eliminate mistake making because that's an unrealistic goal. Instead, focus on mistake minimalization. Number 2, acting on impulse is always a game loser. Believe it or not, you can't stop looking at and getting swayed by the nonsense these news channels are selling about the market. 3 decades ago, you had the honor of daily market updates. Today, there are more than 18 hours of it. Surprisingly, instead of the volume of news, only the amount of nonsense has changed, and most of it is not only useless, but can also be detrimental to your financial health. You can't only trust an advisor who comes more than twice a week on the most popular news channel because he's getting paid for criticizing a few and appreciating the rest. You never know if he has personal interests attached to it. So before taking any advisor's words seriously, make sure to do your own research and analysis, and also gather information from a number of independent sources. Not acting on impulse will save you big time. Investment is a game of patience and luck, just like poker. And while gathering information, employ filters. Take what is relevant and leave the rest. Number 3, you will doubt your investment. Your stock proceeds to lose 10% of its value or your property gets damaged. Many people start to doubt their investments because of short-term price movements and problems. It's easy for what's happening in the moment to detract your focus from the long-term narrative. Any investment you make should be based on what it may look like in the next 10 years rather than the next 10 days. When you invest with the long term in mind, it's easier to remain confident in your investments when there's high volatility. It's still normal to doubt some of your investments. Your stock has a few red days in a row and you may start to get nervous. Most people get nervous because of these short-term price movements, but you should get a criteria for when you would sell an investment. If a company has multiple years of flat or declining revenue, there are better opportunities elsewhere. Don't let one earnings report steer you away from a company. If negative trends persist, that's when you think deeper about if that investment should remain in your portfolio. Number 4, investment baits. A wise man rightly said, if it's too good to be true, it probably isn't. The same thing holds true for investments as well. Take any attractive investment scheme offering incredible returns. The scheme is presented as the best investment opportunity you can't afford to miss. It won't outline explicitly what the product composition is and what are the havens wherein your money will be allocated. It'll be presented as a complex and completely out-of-the-box idea. There are many past investors who've been a delicious prey to these cunning predators who wait for you to invest a large sum of your money in their traps. Moreover, they need you to invest, which prevents them from alarming you regarding any inherent risk. The rule of thumb is until you have information about the investment scheme inside and out, don't invest your hard-earned money so blindly. Otherwise, be prepared to be slaughtered. While taking investment decisions, look into the product composition and rate of return. Have an expected return in mind and make a composition. Arrive at a realistic risk-return picture before investing. There are many financial advisors who would advise you on what factors to consider before making an investment. People usually focus on the money they'll gain after 2 to 3 years, not knowing it's a game of decades and not days. Number 5, low transaction cost. There used to be an era of high transaction costs, but regulatory sanctions and competitions have forced the transaction cost to decline. The brokerage that one pays for intraday has come down as low as $10. In the case of long-term investing, it's become negligible. So is it benefiting investors anyhow? In reality, such a decline has done more harm than good. You may see it as one of the worst things to happen to the investors, which most of them aren't always aware of. Investors have started trading in blindly without giving much ado. The frequency of trading has risen terrifically. Now, they don't think before they act, which can certainly backfire in the future. Such an act is instigating speculative tendencies in an investor. It's antithetical to long-term investing and wealth accumulation thereby. Investing your hard-earned money is indeed very scary. It's easy to get fooled when the investment scheme is too appetizing to ignore, but with little precautions and information about how the market works, you can enter this business with a more open and cautious mind. You might face failure in the short term, but keep your focus on long-term achievements and keep checking the relevant elements of a company's balance sheet. Let us know your thoughts about this in the comments down below, and don't forget to like and subscribe if you haven't already. Bye for now, guys.